when you're building your financial plan, the first mindset is you got to have a good defense,
Okay.
and the defense is designed to keep you from losing, and so you got a good defense, and then you have an offense, which is growth, and along the way, in both of those categories, it gets right back down to advice.
Hey guys, this is Matt Helton with OneTrust Home Loans, your reverse mortgage experts, and you found the Serving Senior podcast. Now, this is where we highlight those businesses and those individuals that help seniors not just survive, but thrive in retirement. Today, we have another one of those awesome guests. We have Mr. Roy Matlock Jr. He's the founder of Roy Matlock Jr. Advisory Firm, and he's going to share with us how he helps seniors in retirement as well as prepare for retirement to make sure that they have the cash and the cash flow that they need. So, Roy, how are you doing today?
Hey, all good, Matt. Thank you for inviting me. This will be good.
Yeah, you're so welcome. Yeah, thank you for being here, Roy. I really do appreciate it. I always love to hear people's stories, and a lot of the people, the listeners, love to hear how people got here and kind of some background. So maybe, Roy, if you could share a little background of how you got into this business and maybe some of the other jobs you've had and even where you're from would be great to hear.
Yeah, well, I'm from Nashville, born and raised, one of the
Oh,
few
nice.
here in Nashville.
I've been
And
looking for you. You're the one guy. They said there's one native. I found you.
I'm about the only one now. It used to be everybody.
Yes,
And
sir.
so, yeah, I grew up here in South Nashville, went to BGA, which
Okay.
is Battleground Academy in Franklin,
Got
Tennessee.
it.
My dad was self-employed. He was the first and that went out and really did anything. He had a manufacturing company, manufactured semi-trailers and truck bodies called Matlock Trailer and Truck Body.
Okay.
And so I grew up in a self-employed world, and when I was in college, went to Austin Peay State University, had 2 years of bad grades there.
Okay.
But during that time, I got involved in sales, and it started with sales, and then did Cutco knives. I don't know if you're familiar with that. And so
Yes, sir.
that's the type of deal that everybody quits in about 2 weeks. And
Mhm.
I stuck with it and did it for a number of years. And I learned that, if I could get out and meet people and that I could do well. So I made a career that way. So I've never had a job. And then in the early 80s, at 23 years old, I got my insurance license.
Okay.
Life insurance and health insurance. And then about a year later, I got my securities license. And so that was about 40 years ago that I started, in the insurance investment financial advisory business. And so anyway, that's kind of a brief part of it. And I'll tell you some more a little bit later.
Okay.
So, yeah.
That's awesome. Well, I knew I liked you from the moment I met you. I didn't know you were a knife salesman, so I was Southwestern Book Company.
All right. All right. Well, there you go.
So
Southwest. Yeah. I know all about those guys.
yeah, that's awesome. Do you still ever buy any of the knives or?
I still got some, and I did it for 5 years, and really, it just changed my whole outlook on being my own boss. Because
Yep.
it was commission only, 100%, and so that's kind of how that worked. And it also put me in the mindset of getting my name out in the public, and so I got in the business, and then in the early '90s, one of the guys that was one of my reps was Dave Ramsey. So
Oh, okay.
Dave was a rep of mine. Actually, brought him in and trained him, and he had his license with me, gosh, almost 9 years. And so we had an idea one day that we should do a radio show. And so we started
Get out of
it's
here.
called the Money Game here in Nashville.
Okay.
And so we went on air with a bankrupt radio station, 99.7 here in Nashville. And when we told them that we would do the show for free, they said, "Your own." And we got an hour a day in Nashville teaching people about money, and we called it the Money Game. I ended up doing that from all the way up to 2002. And 3 hours a day, 5 days a week, talking money. And I'm back on now. If people are tuning in,
Okay.
this podcast, I've also the Roy Matlock Jr. Money and Business Hour, and I'm on the weekends here in Nashville as well. Went back on in 2018 doing talk radio. So
Okay.
yeah.
Nice. That's an awesome story. Well, give us maybe an unknown Dave Ramsey story if you got one you could share.
Oh gosh, I mean, well, I remember one time right before Dave went bankrupt, we went through the Wendy's drive-through, and Dave got there and he didn't have enough money to pay for but he was in his Jag, um,
Okay.
but he didn't have enough money to pay for lunch. He's like, man, he said, "You got any money?" I'm like, "Yeah." And then the other time we went to the Ladies of Charity, which does these consignment sales.
Okay.
I told Dave, I said, "Hey, they've got your Financial Peace University tapes over there. Somebody's selling them." He said, "Really?" I said, "Yeah, they're selling them for 99 cents." And he's like, "Yeah, all this kind of stuff." And so anyway, yeah, we did that. I mean, we were on air 3 hours a day for all those years. So
Wow. Those are some good stories. That
yeah.
that is hilarious. Oh my gosh. Well, that's a name around Nashville that you hear quite often. So thanks for the background, Roy. Maybe could you share a little bit with the audience, what your wheelhouse is? Maybe I like to say maybe some superpowers, financial superpowers that you use to help seniors, and also maybe tie in there what some of the biggest mistakes that people make with their finances, and maybe some of the ways you coach them out of that would be great to
Yeah,
hear.
the thing that I do a lot of seminars, and
Okay.
the seminars really one of them we're getting ready to do, which will be coming up in January, is called "They Should Teach This in High School."
Mm,
So what happens is we come out of maybe a middle America mindset, and your family may have come up that way, and financial advising and understanding finance is just kind of Greek if you hadn't had somebody really to go into that. And so
sure.
the first thing that I've always told people is, there's two steps to becoming financially independent. The first one is you got to find something you like to do, or
Mhm.
work wise. And because if you don't like what you're doing, you're never going to be any good at it. And you're
Mhm.
not going to put the time into it. And so therefore you're not going to demand a bigger paycheck. And so I
Wow.
always have been of the mentality that step number one is change until you find something that you like to do. And then when you do that, it's like a hobby. I ask people all the time. So if what's your hobby? And they say, "Oh, I like to play the guitar." And so how much time do you put into it? And they say, "As much as I can." And
Mm,
so one of the things I was able to do, and I encourage this, especially if they have kids and grandkids, is, I know we're talking to a more retiring market, is talk about that. Find something you like, and if you can
mm,
get somebody liking it, they'll get good at it. And then when they get good at it, they're going to solve their income problem. And
mm,
so the income problem is, you get paid for what you know what you do, and if you become an expert at something, you usually can do okay. And then the second challenge people run into is they don't know how to handle their money, and that's I call it a quality of life issue. And
okay.
if this is my outgo and this is my income, then I'm in trouble. But if my
Yeah.
income is here and my outgo is here, the gap is what I call the quality of life gap. And that
Mm,
gap is if you have a big gap between what you have coming in and what you have going out, then things go pretty good. And so what I try to do is, encourage people, number one, always be working on your income. And number two, always be working on, keeping about a 25%
mm,
gap. And
mm.
then if you have some down years or anything like that, you can survive it. And so that's kind of the starting point of the
Okay.
way I've been teaching. And then our wheelhouse is really, I say this, from birth to death, because, when my daughter was born, the day she was born, I set up her college plan. Or
Okay.
and was able to pay for 4 years. I got 4 kids, and my early planning allowed me to be able to have money set aside, so there wasn't student loans and stuff like that. And then when you're at or near retirement, what's one of the biggest things people are looking for? They're saying, "I need income. I want to make sure my kids are taken care of. And when
Mhm.
something happens to me, if I go in the nursing home or whatever." I know that's kind of our mentality of why we've been partnering, because we know that the reverse mortgage is a piece and that can work right in. I've started, referring people reverse mortgages long before anyone had any idea. I'm talking
Mm,
like 12 years ago, something like that.
right.
So yeah, so I think that, and then when you're building your financial plan, the first mindset is
Mm.
you got to have a good defense, and
Okay.
the defense is designed to keep you from losing, and so you got a good defense, and then you have an offense, which is growth, and along the way in both of those categories, it gets right back down to advice. All right, and who are you talking to? Where are you getting your advice from? I can tell you right now that the number one reason people fail financially, number one, more than anything, is they don't know how to set a budget up. All right. And
Hmm.
then they spend more than they make, they get in debt. And then before they get in debt, it's just gets worse and worse and worse. And so that's kind of the starting point is when it comes to retirement planning, there's a handful of things. I mean, we can talk, I don't know how much detail now you want me to get into.
Sure, go ahead.
But there's things when you're
Mm.
retiring that you need to be aware of. I call them knockout blows, uh,
Okay.
and then I have some that are irritations. And so let's talk about a knockout blow. A knockout blow is that you're near retirement, and we have a big downturn in the stock market, and you got your money fully invested. All right. To give you kind of a number, back in 2000, when we had the tech crash, it took 8 years to recover. All right.
Wow.
So if you were all invested then and you started pulling money, it was devastating to people that were
Hmm.
in it. So one of the things that we want to do is make sure that we have our money, allocated correctly, so we don't end up doing that. You got to have market risk. Okay,
Hmm.
but you got to have you should always have your money divided in such a way that you never sell on the down. All right.
Okay.
Always got some. So that's the first one. The second one is my mother. I brag about my mom. She's 101. And,
Wow.
it's funny about inheritances. Wow, that people wait around think they're going to get an inheritance. My mother's 101. All right. And so, the longevity risk, that is, you outlive your money. All right.
Yep.
And so we do a lot of things. That's where annuities come into play, where you have a portion of your money, not all of it, a portion of your money in something that can give you a lifetime income guarantee.
Okay.
So we'll do that. And then, of course, long-term care is a big concern. Average day, about 20% of the population will end up 5 years, okay, and in a nursing type facility. And so you want to just there's a lot of products out there now out that you can do to do something about that. So the healthcare concern, longevity concern, and market risk are what I try to first, take care of if I meet with someone, or any of our guys do. Uh,
Got it.
we want to do that, and then the rest of the stuff. There's three other areas that I call irritations, and those irritations would be inflation. All right. And what do you do to cure inflation, or to try to keep up with inflation? You gotta have a portion of your money in the stock market. And what
Okay.
that allows, companies raise prices and stock prices go up. And so they have a spread to where they can keep making a profit. So you want to have a portion of money there. The other area that I see is an irritation is taxation.
Hmm.
Uh, we may see changes with uh, new administration and stuff like that. But as it stands now, you can pay Social Security taxes on your Social Security if you don't plan right. So
Right.
withdrawal planning is a big deal to be able to pull the right money from the right places to keep you from raising your Medicare and all the different things that go along with that. And then the last thing that I call it an irritation, it's your kid's irritation, and that is you don't have
Mm.
a will or a trust set up.
Okay. Yep.
And the craziest 68% of the population has no type of estate plan. And if
Wow.
you want to really know, around here, how bad it can get is, the football player Steve McNair. Uh,
Mm.
type
Yep.
in Google Steve McNair estate and
Okay.
what's going on, and he died without a will and had a big estate, had blended family, and kids from one marriage, two from the other, and of course his wife wasn't real happy about how things went down either.
Mm.
And
Right.
so long and short of it was it was a big disaster and cost a lot of money, and you don't want your kids going through all that. So I try to, in the retiree market, I do that. And then one of the other things that I like to do is encourage the grandparents to open up small mutual fund accounts for their grandkids or their kids.
Okay.
I say small. We had one where for $250 they can do that, and you're changing the mentality of I'm going to go open a savings account.
Mm-hmm.
Okay. I'm going to have an investment account. And when you do something like that, then at Christmas and holidays and stuff like that, guess what you do? You can throw $50 in there
Mm-hmm.
account. All right. And change family trees. So anyways,
That's great. Yeah.
I can ramble all day, but that's kind of where
That's great. Yeah, it's great advice. I actually saw a couple years ago at Christmas time, there was a 10-year-old boy that he was trying to convince his family that he didn't need all the toys. So he was able to at least convince them to whatever they were going to spend on him, cut it in half, give him half of it for his portfolio and half of it
Yep.
toys. And he was like 10 years old. He had like $10,000 in investments, and he was out sharing that message with other people about how all the toys go away, they get thrown away, they get recycled, but this is going to change his life. And he was trying to spread that message with other people. So it's great advice.
I had a seminar one time, and it was a big room of people, and this kid, I'll say kid, he wasn't a kid, but when he was 14, 15, 16, he worked at Wendy's.
Mm.
And we had set up a little account for him, and he would throw money in it. And he stood up in the middle of my seminar. He was like 32 years old. He said, I just want you to know this works. He said, I was not only able to buy a house and have a down payment, he said, but I got money left over from the stuff I did back when I was a kid,
Wow.
So
Fantastic. That's great. Or you, to piggyback off something you said earlier, you mentioned about if you find a job turns into a career that you love, that you're going to do really well at it. And it sounds like you've been doing this for what, 40 years?
40 years. Yeah. I've
That's
started with a $50 a month investment, my first mutual fund, and we've invested over $1 billion for.
wow.
So, yeah.
Yeah, that's awesome. Well, you
Yeah.
must have found what you love nice and early. What do you maybe share with us what you love about what you do, and why do you keep on doing it?
Well, I'll give you an interesting example because I still meet with people. I have a big organization of advisors, and
Okay.
but it's interesting. Yesterday on Saturday, today is a Monday. I had two phone calls, and the crazy part was one of them was one of my very first client. Is that crazy?
Really?
40 years. All right.
Holy cow.
And then the next call I had was I had a client of mine's son that was in the first year, okay, that I was in business.
Okay.
And it's since passed away, but his son had inherited $200,000 and called me. And I thought, that's cool. I mean, that, all these years. But what I'm seeing now is the babies that we set the college funds up or graduate from college and they've got no debt, just a lot of stuff like that. So it's good. And being your health and your family and your finances, if
Mm-hmm.
one of those three are not right, life is not good.
Sure.
And it's pretty hard if you don't have any, money,
Yeah.
really, really do things. And, I know about what you do. We've partnered up on this. The big thing that we run into is most people, when they get to retirement age, they could use more income.
Mm-hmm.
One of the big challenges is where do you get that income?
Yep.
And that's where, we've used reverse mortgages to pay off debts. We've used reverse mortgage to get cash to where they can, free up money to do some other things, downsize their house. And I've recommended reverse mortgages, the same, why would you, put a monthly payment in when you can, I call it reverse mortgage and invest the difference. All right.
Okay.
So I had a client that I met with just this last week, and she's got about $800,000 house that's on the market, and the intention is go to a condo, and that 800 is paid for. And I said, look, before you do anything, here's what you ought to do. You ought to just do a reverse mortgage and put enough down to have no payment on the condo. And now we're going to take what would have been 800 for a $400,000 condo. We're going to take the 800 and put just enough down to have no payment and invest the difference and turn it into an income. So a lot of ways of doing things. So
Yeah, that's great. Where what I'm glad that you mentioned that and brought that up. Maybe what was your journey like learning about reverse mortgages? Because we know there's lots of, misconceptions and a lot of changes that's happened over the years. I guess, how did you become open-minded to look into it? Is that a natural quality you have? And then as you looked into
I
it,
mean,
when did you figure out it was good?
I was, I'm, when it comes to finances, and that's my gig. I get up in the morning, every morning,
Okay.
I'm reading, I'm learning. I mean, it's a lifelong process of learning. And when I was on the radio, the interesting thing about it, so now I got white hair and
Yeah.
3 years old. When I was on the radio in 1992, I was 31 years old and
Okay.
looked like I was 16. And
Mhm.
so I would have people come in. I always would say I had a radio face, and that's one of those deals. Nobody knows who you are; they just hear you. And I would come in, and the first thing that happened is I'd have an older couple come in, and they would be like, look at me real funny, and they're like, "Where's your dad?" They couldn't believe that a young guy like me could do anything. And so
Mm.
I me on a bookshelf, and the
Okay.
bookshelf I made, I said, look, I'm 31 years old, but I've got a life of experience because right behind that is what I did to learn what's going on. So I can
Mm.
absolutely advise you on what's happening. But I always see those weird looks and stuff like that. So reverse mortgages um, have been around for a long, long time, as you
Okay.
know. They were generally in states like California and states where we had big time real estate appreciation. And then that was, if you look at California real estate and stuff like that, we never had that kind of boom like we do now in Nashville. And so they became popular out there. I don't remember exactly how I got involved in it, but I just saw it as an opportunity to free up cash. And one of the first ones I did was I referred it to a company here. I don't even know if they're around or not, but the I referred it because it was two school teachers who had a house that was worth about 500,000 that was paid for, but
Okay.
they had gotten themselves in trouble with some credit card debt and car payments. All right,
Mm.
and now they're retired, and they were spending about 13 or 1400 a month on credit cards and car payments, and they were only bringing in about a little over, it might have been 3,000 a month. Just a long time ago in total. So just their debt was 50% of their retirement. All right. And so when we did that, we were able to get that, eliminated in terms of the payment. And we took them up the equivalent. I think it was, anyways, it was right off the bat, we got an extra 13, 1400 a month, which
Okay.
retirement, and this has been maybe 10 or 12 years ago. All right. That's a huge amount of money.
Hmm.
So that's how I started. And then I've used it for a lot of other things, you can debt consolidate as one. I have another client of mine out in Brentwood, Tennessee, that, we started pulling her money from different areas. But what we were able to do, because we did a reverse mortgage and eliminated a $2,200 house payment,
Wow.
that allowed her to defer her IRA withdrawals. All right.
Hmm.
So therefore, we were able to pull money from other places and not have to pull so much, which didn't push her into taxation on her Social Security. All right.
Right.
So by eliminating that payment, we eliminated premium increase on Medicare and also taxes on Social Security. So that would be, so I've done that. What else have I done? I've done, we have, those lines of credit can be used
Yep.
for different things, from, buying a long-term care type riders and stuff like
Yep.
that to protect, where you could stay in the house and do that. I mean, I'm just going on, but I think it's I think for the right, is it for everybody? No, but I think that once you think of get the reverse mortgage and use the difference, okay, that's the way I go about using them. So.
Yep, completely makes sense. Completely makes sense. Roy, maybe could you share with the audience maybe one or two examples of just some clients that stand out? Maybe somebody you met wasn't in the best situation, you were able to fix them up, get them on a plan, and then where they're at today. I'd love to hear a couple stories.
I mean, we had a scenario where the guy came to me. He says, "I got $1,000 saved," and we're like, "You're retired with $1,000 saved, and you got a $900 house payment and $2,600 in Social Security. So that is not good." And by using the reverse mortgage, the guy was able to get about, I don't remember, 100,000 of cash out of the property and eliminate the house payment. We took the cash out, stuck that into a lifetime income guarantee, $1,000 a month. So we eliminated like a $900 house payment and ended up with $1,000 income. So we did a $1,900 a month turnaround, and so we had that. Had one just this weekend that similar deal. They got no cash, okay, saved to speak of. They got a house that's got equity in it. This one doesn't have enough equity to pull cash, but they have enough equity in it to eliminate a $900 house payment. All right. And, $900 when you're retired is a big deal. And then we got other people that have scenarios. I'll give you another example. So that's for somebody that is not in a good position, but they bought their house. And I always tell people the reason that people have equity in their house is a poor savings plan. All right. And if you're wanting to get ahead, what you have to do is you have to pay yourself first. And I always encourage, make sure that you're contributed to the 401k. 50% of the people, get this, Matt, 50% of the people that are eligible for a 401k with matching funds aren't participating.
Holy cow.
Blows my mind. All right.
Wow.
So you set up automated savings, and that gets you moving. And then your house is similar. That's why you have equity in it. Unfortunately, a lot of people show up and they don't have any other monies. Then we have another group, and that's the person that's really planned well, and they've got investments, they've got all this stuff, and then their scenario is they have a big retirement plan, and they're going to take RMDs, required minimum distribution. And as a result, one of the ways that they can pay the taxes and keep the entirety of that retirement plan together is they can use a reverse mortgage to pay the taxes. And now they convert it to a Roth. And by converting it to a Roth, they don't have to do those RMDs and stuff like that. So
lots of ideas.
Yeah. We use it for a lot of ideas. My belief is that, what we do, we have an insurance marketplace. With what we do, we provide advice, and then we have an insurance marketplace. And banks and insurance companies can say guaranteed, the word guaranteed. And so we have an insurance marketplace to put some guarantees, the what ifs and stuff like that. And we use those for whatever reason. And then we have on the other side, we're fiduciary, and we have access to all the investment products. And then we use tools like yours, to come in and help people free cash up or eliminate, cost so they can get, a retirement plan in place. And the most important thing about retirement, when I'm talking to people about accumulating money, my mindset is the value of the investment account. We want to get as much as big, and you live off of that. But when we retire, we're talking about cash flow.
Got it.
So what is the best way to get the most dollars after tax into someone's pocket? All right. It won't go away, that they don't outlive. And so that's where we use tools. All right. And that's all this is. It's a tool. It's like, I tell people, you've got to have a will and a trust. All right. And 50% of the families now are second marriage and they've got kids. And I can tell you, I can give you every story under the planet where husband and wife get remarried, both have two kids, one dies, the two kids on one side lose out. All right. Or there's a house together, who gets the house. It just goes on and on and on about stuff like that. So I tell people, you got to use tools. All right. And that is a tool, a will and a trust. It includes healthcare power of attorneys, financial power of attorneys, all that kind of stuff allows you to plan. All right. That's all it is. It's a plan. I mean, we're all going to end up in the same spot when it's all over. But along the way, you don't have to be stressed out. You don't have to leave your kids to fight. Okay. So that's another tool. So I add all this in that senior market. We use the tools. We've got, defensive products, products that, are for the what if. We have the stuff to grow. All right. We have things like what you do, where we go in and mostly I would say, what is a reverse mortgage? It's a cash flow. It's what it is. So we increase cash flow by using reverse mortgages. We remove stress and worry from your kids when it comes to the wills and the trust and stuff like that. So we do all that kind of stuff.
That's fantastic. Fantastic. Roy, maybe could you share two things? One is what areas do you and your team serve? And then number two, how if someone resonates with your message, how will they get in touch with you guys? What would be the process?
Well, there's a couple of things. We're pretty much everywhere. We're licensed in every state. When COVID hit, we became a big Zoomer, just like
nice.
So we have clients pretty much every state. And second thing, as far as reaching us, a couple ways you can do it. You can go to my website, roymatlockjr.com, and you can fill out a form. There's a lot of different things. You do downloads and stuff like that. We've got everything from budget forms to, you name it. We got it all on there. I'd also encourage you to check out my podcast. I've got about 170 of them. So lots of content. It's a Roy Matlock Jr. Money and Business Hour. And then, yes, what I can do is, stick in there if they wanted to call. All right.
Okay.
It's very easy. 615-843-2999. So 615-843-2999. So it's pretty simple, but we're listed. You can check us out on the internet, Roy Matlock Jr. Advisory and that kind of thing. So
got it. Thank you for sharing all that, Roy. Well, as we wrap up here, Roy, thank you for what you do for seniors. Thank you for the message. I've seen you in action, and you really are the real deal. You're not just telling a story here. You really dive into helping people. So we really do appreciate you doing that.
Thank you, Matt. It's been fun. Guys, and I'll brag on you too. I know, Matt, you've worked with a lot of our clients. I appreciate that. We've always got great reviews. And I think it's a great product. What you got, great service you're doing. So
thank you for saying that, Roy. Well, before we go, anything that I should have asked you that I didn't ask you that you'd want to share?
No, I bet people have probably had all they need of me for one day. But anyway, hey, and they can also come out to some of our seminars. We'll be doing some.
Yep.
Come out and meet us. So
yeah, that's awesome. Well, Roy, thanks again. We really do appreciate your time.
Very good. Thank you.
Yep. And thank you for watching the Serving Senior podcast, where I highlight these fantastic people like Roy that help seniors not just survive, but thrive in retirement. Thanks again. We'll see you on the next episode. Talk to you soon. See you, Roy. Hey, this is Matt Helton with OneTrust Home Loans, home of retirement mortgage solutions. And we really do appreciate you checking out the Serving Seniors podcast today. Now, please go to the description down in the body of the podcast where you can subscribe to get future shows. Please click that notification button so you get notified when other shows drop. And also, if you can go to servingseniorspodcast.com, and we'd love to hear a comment about our show. We have a heart to serve seniors, and we have a heart to make sure seniors don't just survive retirement, don't just get by in retirement. We want to show seniors how to thrive in retirement. So if you know of anyone that's 55 and older that could use some extra cash flow. Maybe the retirement's not going the way that they like. Our retirement mortgage solutions are designed for folks, and depending on the state, they're either 55 or 62 and older, to make sure that they have that kind of retirement that they want. As long as they own a home and they're in a good equity position, there could be some solutions that they may not have thought about, or maybe they've thought of and they just didn't know how they work. That's what we do. So anyone in that age group that could use some mortgage advice, my team and I would love to be able to help them. Thanks again, and look forward to seeing you on the next show. Have a great day.